GrubHub is an interesting... GrubHub is one of the most interesting gig economy apps we have discussed on this channel. I don't talk about it much. If people want their daily fixes of GrubHub information, I always recommend Team LMDU and Paid to Drive. Pete and Tony. They're good guys, by the way. But I do talk about them once in a while, especially in situations like this. GrubHub is at least before Uber and Lyft went public, they were for the longest time the only gig economy app to be publicly traded. That meant like a year before you could buy Uber and Lyft, before it was cool for these, gig economy companies to go public and make millions of dollars, billions, which kind of happened, kind of didn't. GrubHub was going public and it was doing things right. Now, I do, for the record, have a share in GrubHub stock. My goal is to have one share of every company that I talk about so that as an investor, I have a vested interest in discussing the news. Some people says it's backwards thinking that you'll be talking negative about stocks you own. Well, again, I'm not investing a lot. I will let you guys know if I decide to invest a lot. But I do it because I got tired of people basically saying like, well, you don't drive. What's your incentive to talk about? So I was like, well, I'm an investor. So I guess I have an incentive to talk about this. And it kind of worked, actually. People really don't bring that argument up very much. But anyway, before we talk about the story, hey everyone, this is Kevin the Apptrepreneur. Welcome to my channel. If this is your first time here and you happen to like this video, please do me a favor, hit that subscribe button and ring that bell notification. We upload videos on a near daily basis. You'll be notified of those, premieres, live streams, all that jazz. So anyway, here's the website of GrubHub. I just need like a visualization, so just in case you didn't know what GrubHub is. As you can see, there's 5,794 open restaurants, 791 delicious deals, 251 places with free delivery. You can get Thai, pizza, Chinese, Mexican, Japanese, sandwiches, breakfast, and Indian, and more. It tells you on this website which restaurants are now open. You can see the star ratings, or there might not be enough ratings. Who knows? A lot of 5-star restaurants. They have the popular brands, all this jazz. So, anyway, that's the GrubHub website. And here's the thing. As one of the first publicly traded companies, like I've looked at that stock. It's been wild. It has gone down. It has gone up extremely in both cases. It's by far the most unpredictable stock I own. And I wasn't too surprised that rumors appeared that, well, they might be for sale. So here's from Vox. The Wall Street Journal reported yesterday that food delivery service GrubHub could be up for sale. Whether or not that sale comes to fruition, it highlights that GrubHub and its competitors are struggling to be over who brings you food from restaurants. GrubHub has seen its market share decline to about 30% of U.S. sales in November, down from more than half just 2 years earlier. According to data from credit card measurement company Second Measure. Meanwhile, venture capital-backed startups like DoorDash have moved into the lead with 37% of U.S. sales. Uber Eats, Postmates, and a handful of smaller competitors are also duking out in cities and towns across America. Well, here's the thing. There's more bad news. Uber Eats is apparently not making money. It's not. I really thought they were for the longest time they were, but apparently they're not making money. Postmates is also rumored to be for sale. DoorDash seems to be in the strongest position, which pisses me off to no end. I mean, those of you who've been following for a while, you know what I feel about DoorDash. But DoorDash seems the healthiest. They do not have these sale rumors. They do appear to be on the track to go public, and they just bought Caviar, although I haven't heard of anything happening with Caviar recently, which I guess is good. I really liked Caviar. But here's the thing. So here's the market share. The pink is GrubHub, and like way back in 2017, they had 55%. Apparently now they have 31%. I'm not going to lie, that's not a great share. And you see, it hasn't gone down. I mean, it goes like to 32, and then it goes up to 33 briefly, but it's definitely heading in the wrong direction. This is not the direction you want to go if you want to be a successful business. And so I'm not surprised that these rumors are popping up. However, who would actually buy GrubHub? Well, there's a couple people who are interested. First of all, Wal-Mart and Kroger are reportedly interested. Which kind of makes sense, because here's the thing. Bosses at the retail titan and supermarket giant, along with managers at Albertsons and Hold de Haas, which owns Stop and Shop, assess how the food delivery startup could augment their companies. So, let's see here. I've spoken with executives from each company, especially Walmart, and there is interest in acquiring GrubHub, Ladd told the newspaper in the email. I believe the value of GrubHub to Walmart is that they could leverage GrubHub for delivering food and groceries. Yeah, you might remember Target bought Shipt. And Shipt was pretty much something that nobody had heard of before. But what Target saw in it made a lot of sense. Hey, same day delivery. We can do it. As long as it's in the store, we can do a same day delivery thing. And we'll do it with independent contract workers. It made sense. However, Amazon is also interested in buying GrubHub. And this would make a lot of sense. Because here's the thing. Amazon had been trying to get into food delivery for a long time. They had Amazon groceries. I don't know if you remember this. But they were actually for years trying to deliver groceries and trying to figure out a way to do it and basically could never crack it. It was always just way too expensive. And Amazon does not mind losing money. They don't mind losing money at all. But what delivery was costing them, like for the groceries, was even too much for Amazon, kind of like their phone. But this would solve a lot of it. If they had GrubHub, then not only would they have a bunch of independent contractors, kind of like their Amazon Flex people, that they could use to deliver groceries for Whole Foods and stuff like that. But they could also have access to a lot of deals with restaurants. They could probably, push their thumb on them a little bit, get better rates. I mean, it's happening in Australia and the UK with their investment in Deliveroo, which we talked about in another video. I'll put a link to that above and maybe even below in the comments, who knows. But yeah, it's not the first time Amazon's done this, and it would make sense. This would solve a lot of their problems. However, it should be noted, GrubHub is currently denying that it's for sale. Here's the other problem, though. Because they're denying it's for sale, the stock is falling as a result. So, let's see. GrubHub stock is falling after the online food delivery company said it doesn't plan to sell itself. On Wednesday, GrubHub stock jumped 13% after the Wall Street Journal reported that GrubHub is looking into strategic options, including a possible sale. Now, the reason the stock would normally jumps when on these rumors is because sometimes what the company pays in for the company, if you have let's say 10 shares in Barnes & Noble stock, which doesn't exist anymore. I did, by the way. I had Barnes & Noble stock. I bought it when it was just a couple dollars, and then on rumors that it was being bought, it jumped to something. It was insane because they might offer $10 a share, and at that point, you're making money off that stock. Now that wasn't offered that much. In fact, I ended up selling all the stock before the deal went through because what I could sell the stock for was worth more than what the company was actually offering. Always, whenever you hear that a stock that you own is being bought by a company, look at the deals and keep a close eye on it because depending on what those details are, you might make more money by selling your stock before the transaction goes through. But anyway, in an email statement, GrubHub said there's currently no sales process for the company, which is probably true. Unless they are being bought, there would be no sales process. It doesn't mean they're not up for sale or they're not looking. Quote, while our policy is not to comment on rumors, given the considerable media speculation that appeared Wednesday, sorry, I guess I'm contributing to that, we felt it was important to clarify that there is unequivocally no process in place to sell the company, and there are currently no plans to do so. We have always consulted advisors about a broad range of issues, including potential acquisition opportunities. That has not changed. So their stock was down to $51.74, which I'm just going to mention right now, that's still more money than Uber and Lyft. GrubHub is worth more than Uber and Lyft. Let that sink in a little bit. But here's the thing. The rumor started. And you have Amazon considering buying it. You have Walmart and Kroger considering buying it. I mean, that's something that investors won't be able to ignore for long. And this is the kind of rumor that can sometimes be dangerous, really, when you get down to it. Because, the stockholders can say, well, hey, companies are interested in buying us. We're not making money. Our sales are shrinking. So let's sell to Walmart and Kroger. Who wouldn't want Amazon stock? I know, I don't like the company, but look, the stock is healthy. If Amazon said, hey, we're going to buy GrubHub in an all-stock acquisition, you bet I'd vote for that. that means my $54 a share becomes a heck of a lot more valuable, and I can cash out, and I could be lining my pocket with gold, with little casino chips. I'm going to Vegas, baby. I mean, why wouldn't you do that? And this is where the future of these companies are going. I do believe that Grubhub will be sold. It might not be this week, it might not even be this year, but these companies are not self-sustaining. They work better as extensions for business than as actual standalone businesses. All of them do. So that's what I think is going to happen. Grubhub, DoorDash, Postmates, they'll all be bought out by big box retailers. Maybe Walmart will get Grubhub. Maybe Amazon will buy DoorDash. Maybe Kroger will buy Postmates. And that's going to create some interesting dilemmas when it comes to the law, with antitrust law. Because, again, you have situations where it's like, okay, you're not only in business for yourself, but now you own a business that relies on their competitors, in a sense, to deliver food and products. And then one of them, which is Amazon, particularly Amazon, although I'm pretty sure Walmart would be pretty guilty of this as well, they will probably pressure not only the companies that they're doing business with, but with the consumers, the customers, I should say, who maybe they'll push them towards restaurants and stores that give Amazon better commissions. This could get really ugly. This could become very unfair. I mean, look, Amazon, they already are touching the edges of the monopoly right now. So is Disney. Although we're not talking about Disney, I'm just bringing that up, I guess. So who knows what's going to happen. Anyway, that's where we're going to leave this one, though. Grubhub's official word is that they are not for sale, but personally, I wouldn't be surprised if that ended up not being true. So anyway, what do all of you folks think? Do you agree that Grubhub's for sale? Do you not agree? I would love to know. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.